Hello, everybody. Welcome to An Immigrant's Journey to Financial Freedom. If you're new to the channel, I'm Chioma. Today, I'll be sharing with you my experience of investing in the UK stock market as a total beginner. I'll be sharing with you how much I invested, what it's returned, what I've actually invested in, and any lessons that I've learned in the just over 4 years of investing. So, if you're looking for real honest opinion of what stock market investing is like, then you'd want to stick around for this. So back when I started investing, there weren't a lot of content for beginners. I mean, some YouTubers would do some content for beginners from time to time, but I didn't really relate with a lot of their content. I mean, these were big YouTubers with years of experience investing in the stock market, and some of them had like 6-figure, sometimes 7-figure portfolios that I could only dream of. So I started investing after an Uber ride in a Tesla in 2019. Who would have thought? So I was intrigued by this new car, and subsequent research led me down the path of stock market investing. In the financial year 2020 to 2021, I opened my first stocks and shares ISA with Hargreaves Lansdown. And of course, my first share was Tesla. So when I started investing, there weren't a lot of commission-free platforms like you have today. I mean, the likes of Trading 212 and Free Trade were around at the time, but they were relatively new. And I wanted to go with a platform that had a strong reputation and I felt comfortable investing my hard-earned money. And Hargreaves Lansdown appealed to me. I mean, they've had years of experience, and also you can actually invest in shares of Hargreaves Lansdown. So they are listed on the stock exchange. And of course, you know that if you're investing or opening a platform here in the UK, you have to check that any platform that you're using, they are regulated by the FCA or Financial Conduct Authority, and that your investments are protected or covered by FSCS or Financial Services Compensation Scheme. So one of the drawbacks to using these old platforms like Hargreaves Lansdown, AJ Bell, for example, is the fees. I mean, with Hargreaves Lansdown, I pay £11.95 for a single trade. And then there's foreign exchange fees if you're buying US stocks like I am, and there's account fees. So you can see how it's not really beginner friendly. But the customer service that you get from these platforms is one of the best, if not the best. I mean, with the trading fees, there are ways to go around it. So by using their regular investing feature, for example, where you invest a certain amount every month. So they do it automatically for you into an ETF, but you still have to pay. So after using Hargreaves Lansdown for 2 financial years, by 2022 to 2023, I opened my second stocks and shares ISA with IG. Now I think this platform is under the radar and perhaps misunderstood, and I haven't seen a lot of content around it on YouTube either. And I think it might have to do with the fact that it's often associated with trading. But I've had a nice experience using them. And in the current financial year, I have now opened a third stocks and shares ISA with Trading 212. So all in all, I have 3 stocks and shares ISAs with these providers. So I'll be doing a review of these platforms that I use as well as the other ones out there. I know that as the financial year is coming to an end and we're starting a new one, some of you might be looking for to open a new platform. So you might find the video helpful. So just look out for that. So how much have I actually invested? So far, up until the end of 2024, I've invested a total of £50,000. So the amounts have varied each financial year. I have never quite actually maxed out the full allowance. In the current year, I've maybe just managed about £5,000. But I've carried on investing regardless. The closest I came to maxing out the contribution allowance was the first year and also in 2022 when the stock market crashed. And I felt like 2022, 2023 were the years that I truly experience what it felt to be a stock market investor, and that is that the market doesn't only go up. So where does my portfolio stand now? So to date, my portfolio at the end of 2024 is just over 71,000. So I'll put the amount up on the screen. So that's returned approximately 44% in that time. And what have I invested in? So I have about 12 holdings across these portfolios. The top 90% are in Tesla, Nvidia, CrowdStrike, Alphabet or Google, AMD, Snowflake, and Cloudflare. So I'm invested in Tesla not just because of the cars, but for the humanoid robots, or Optimus as they call them, the energy storage, and also the potential for AI through their self-driving cars. Nvidia is the cornerstone of this AI revolution. You know, the GPUs that they produce are what large language models run on. They control 80 to 90% of the GPU market, which is incredible. CrowdStrike is an endpoint security leader. They compete with Microsoft in this space. I know a lot of people associate Microsoft with, and very rightly, with computers and cloud with their Microsoft Azure. But CrowdStrike control this market, or they're leading in this particular space. So most of the Fortune 500 companies use CrowdStrike. Datadog is a data observability company, and so they provide an interface that allows companies to integrate all of their IT systems and control them from one place. So they send alerts when there's an issue. And Snowflake is a provider of cloud-based data warehousing solution, which data is very critical to AI, and that's why I'm invested in them. And Cloudflare is a cybersecurity company as well. So what lessons have I learned so far? So the first one is invest in what you know. When I started, I was investing in what I saw other people investing, what YouTubers were saying that they were buying, the stocks that were being pumped on both YouTube and on FinTwit. But doing so is a recipe for disaster. My portfolio with Hargreaves Lansdown, which is my first stocks and shares ISA, is my worst performer to date. That account has only returned 11% as at the end of 2024. So when the stock market crashed, I sold those risky assets and I pivoted to tech because of my background. But most people can easily understand the Amazons, the Teslas, the Microsofts, and so on, which is a nice segue to lesson number 2, which is don't chase hype stocks. And be careful who you listen to online. You know, the thing about that is if you're going to be listening to someone saying, I bought this stock, I bought those stock, most likely, and they are saying that they've made, say, £10,000 into £100,000 in, say, 3 months, very likely these are meme stocks. And the thing about that is these are likely experienced traders who know things like the MACDs or the RSIs. And if you're doing what they're doing, it's just really gambling. That's essentially what you're doing. You won't know when would be the right time to sell and cash out. So don't make the same experience that I made. The third lesson is be patient. You may not be able to make money in the first year of investing. My Trading 212 portfolio, which is my newest one, which I opened just this financial year, is actually still in the red. So you have to just be very patient. And the way stock market investing works, for you to benefit from it, you have to invest over so many years. So you benefit from the compounding effect. You don't be in a hurry to triple or 4x your portfolio. You have to ask yourself if you can stomach the volatility if you're buying these risky assets. So just be patient. And you don't want to be sleepless at night thinking about your investments. For example, if you're Christian, the Bible says that the blessing of the Lord make it rich and it adds no sorrow. So that's the point where you're supposed to get to, where you're investing. Investing shouldn't make you have sleepless nights or uncomfortable. Just be patient. Invest in safe assets. So lesson number 4 is that the secret to building wealth is in the stock market. The interest rates you get from the banks, high street banks, or your savings accounts will probably not make you wealthy. I believe the best rates that are out there at this moment in time is between 4 to 5%. So taking a little bit of risk by investing in the stock market can provide substantial and truly life-changing returns over the long term. So the next lesson is, if you are a beginner, start with exchange traded funds or ETFs until you feel comfortable enough researching stocks. So ETF is a basket of companies. Like one of the ones I have is the S&P 500 IT ETF, ticker symbol IITU. So it's a basket of the top tech companies in the US by market cap. There's several ETFs out there. One of the favorite ones or popular ones is the Vanguard S&P 500 ETF, or VUAG. So it tracks the S&P 500, which is the top 500 companies in the US, and that particular ETF has returned 16% annually over the last 5 years, which is incredible. Obviously, this is not financial advice. In fact, by picking the right ETF, you can outperform most stock pickers. The next lesson is that time in the market is important, but also knowing when to buy is more important. Obviously, this won't apply if you are investing regularly in an ETF, say your dollar cost averaging every month or pound cost averaging. But if you're investing in individual companies, investing, say, when a company has run up 100% in, say, 3 months with no obvious change in fundamentals is essentially gambling you're doing. It's just a quick way to lose your money. Don't make the mistakes that I made. So my portfolio with IG that I opened in 2022, that is actually my best performing portfolio. That account is nearly doubled in just 2 years. And that's because those shares were bought when companies were at ridiculously low prices. So the next one is more a myth more than anything. So you hear people say you don't lose until you sell. And by saying that, they're implying that by selling your weak hands, and they use phrases like diamond hands, hodling. Well, there is some truth to this in the sense that short-term price movements should not prompt you to sell a stock. But that will be if you are investing in a credible company, for example, not in a meme stock. You should know when is the right time if you're buying those meme stocks to actually cash out, or to just stomach the loss that you've made and just reduce it and just walk away. So obviously I sold my risky assets in 2022, and I'm glad that I did. At one point in one of them, I was down about 50%. And most of those stocks have not recovered till today. One of them was $40 at the peak, and it's still $1 today. Most of them are still penny stocks till date. So I was really happy that I was able to cash out and just, take a little bit of loss and walked away. Even though the aim is to be a long-term investor, but you should also know when to sell, especially when fundamentals have changed. So you have to realize that if you're down 40% in a stock, for example, you need nearly twice as much to break even. So you have to ask yourself if you're prepared to wait. Some of those stocks I bought, 2 years later, they have still not recovered. So that's it. Thank you for watching. I'll be doing more of these videos, so I'd love for you to hit the notification bell to be notified when there's a new video, and subscribe as well. I would love for you to be a part of this, and I'll leave you with these words. Time is what you have, and the best time to invest is today. No matter what your age is or the circumstance you think, I'm too old to invest or I'm too young, my mission here is to make investing, to make you feel like you can actually invest. And it is really easy, and it has changed my life, and I hope that it does the same as well for you. So don't forget to hit like, subscribe, drop your questions in the comments. And thank you so much for watching, and happy investing.